person, and in this instruction video I'm going to demonstrate exactly why it's important to use the two time periods in connection with the pivot points and again against the buy and the sell arrows. First off, if you notice on our top of our screen again is our 5-minute time period using the E-mini S&Ps. Again at the bottom is the E-mini S&Ps with a 15-minute time period. Notice that we do have a solid sell signal against our pivot point number, and we see sell signal here on the 15-minute, and then again followed by another time period at approximately the 9:15 conclusion at 9:15 Eastern Standard Time. Now, if you look above your screen, we have our crosshairs here that line up at exactly the same time period. So when the 15-minute concluded, we were already in a sell signal basis the 5-minute. This is a great way to follow the flow and say, I'm short in the market, or I have a sell signal here, I can go short right now, and I can place a stop close only or follow this market and look for a series of a sequence event as described in our trading course. We will, again, want to see lower highs, you want to see lower lows, you want to see the market trade on the south side of these moving average values. And in this situation, looking at the 5-minute, it's exactly what develops. Each consecutive time period starts to make, except for in this bar where we see a higher high, but really doesn't go anywhere, and we see not only a lower low, but the market does one other event that we really want to see when we're short, a lower closing assigned value. And that happens right here at this time frame. Following the flow of the market, now we see a doji, which indicates indecision. Notice where the doji is in relationship to the predetermined pivot point support. That's what this horizontal green line is. The computer projects what our potential low of the day might be. Now, if you've been to my seminars or if you've purchased the trading course, you understand that in the concept of markets and cycles, we go through different phases. The first phase is we'll go through a trend phase, and this, as you can see, is a solid trend to the downside. Then we go into a consolidation phase. Now, we may be in a consolidation phase for the remainder of the day, or there's a couple things that can happen. Either the market's going to reverse this downtrend, or it's going to resume the downtrend. But odds favor, based on our statistical information, that the low of the day might be in, as we see here, hammers form more often than not, a high percentage of the time, as the characteristic relates with S&Ps, approximately 40% of the time. So here we have a doji as the low of the day, and we do have a couple buy signals in here at support. So you could probably, as your 15-minute is in buy mode, take 5-minute buy signals and look for short-term scalp. But do understand that the market's been in a trend. It's going to probably remain in a consolidation phase for quite some time, so you want to be cautious. If you were able to capture a really nice trade this morning, or in this example, which we had a short triggered at 58, and the market gave you a profit objective of 53. That's a 5-point move, and as you notice, relatively no heat on this trade. Great signals. If we go back above here, look at our 5-minute chart. Notice that the 5-minute gave a buy signal, and most people would say, hey, we got a lot of these buy and sell signals on the 5-minute. Well, yes, naturally that is going to occur because it's a shorter time period and it will generate and be more sensitive to price changes. But that doesn't mean you're going to take buy signals when the 15-minute is still in a sell mode. What that 5-minute time period might just be a good clue, and how to use that is to possibly scale out of a percentage or a portion of your position. So if you are short 5 contracts, maybe you get out of 3 and hold 2, put a stop at break even, put your stop above the last conditional low closing bar above that particular high, which in this case would be this bar right here. So you know, it's at approximately 1456.5, locking you into a profit, and therefore you could, you know, let it go for the remainder of the day, or identify the fact that we are in a consolidation phase and go off and do something more. And that's the joy of what day trading brings to us. We don't have to stick around all day long if we choose not to. If you've taken a great trade in the morning, and certainly this was a beautiful signal as outlined not only in the course, but the book, but also with the software, then you have an opportunity to move on and do other things in your day or follow other markets. So I wanted to illustrate that the cycles of the market goes from trend to consolidation, and how you can integrate using the 5 and the 15 against each other. When the 15's in buy and you're at the support, look for buy signals. one of the rules that I think that many traders seem to avoid is that they're constantly churning themselves up. They're buying the top, they're buying the bottom. If you can identify that the market had been in a trend and it will go through a period of consolidation, I think you can be a little bit more selective on these buy and sell signals. And therefore, another thing that you can do is you can reduce your expectations of the trade. Understand, we've just gone in a nice trend. This market's been in a beautiful trend. We're probably going to see the market go in a consolidation phase for a while. And if so, if I take buy signals near the bottom of a developed channel and sell signals at the top of the channel, I can benefit and profit a little bit better from that information. Thank you for watching this presentation.